Welcome to Cortburg Speaks Retirement, an audio podcast about investing in the stock market, financial planning, money management, and retirement planning. Each Wednesday, we help investors at all stages of life learn how to potentially grow and preserve their money from first job through retirement. Now here's your host, Miguel Gonzalez.
Good morning and welcome to the Cortburg Speaks Retirement audio podcast. On this week's audio podcast, we are talking about a critical and often confusing part of retirement, required minimum distributions, or RMDs. If you have a tax-deferred retirement account, this is something that you cannot afford to ignore. Let's break it down. What are RMDs? RMDs are the minimum amounts you must withdraw each year from your most tax-deferred retirement accounts like traditional IRAs, 401ks, 403bs, and other workplace plans once you reach a certain age. Why? Well, because the government wants its share. You received tax breaks when you contributed, and now it's time to pay income taxes on those savings. So when do RMDs start? As of 2025, RMDs generally begin at age 73. If you were born in 1960 or later, the starting age increases to 75. You must take your first RMD by April 1st of the year you reached the required age. After that, you need to take one every year by December 31st. Missing a deadline can be costly. The IRS imposes a penalty of 25% of the amount you failed to withdraw, though that can drop to 10% if corrected quickly. Which accounts are affected? RMDs apply to traditional IRAs, SEP IRAs, simple IRAs, 401ks, 403bs, and 457b plans. They do not apply to Roth IRAs during your lifetime and Roth 401ks for distributions after 2024. They will no longer require RMDs. How are RMDs calculated? Your RMD is based on your account balance at the end of the previous year divided by a life expectancy factor from IRS tables. This means your RMD amount changes each year depending on your age and your account value. If you have multiple IRAs, you can total the RMDs and take the withdrawal from one or more accounts. But for 401ks, you must calculate and withdraw separately from each one. Planning around RMDs? Well, RMDs can create an unexpected tax consequence, especially if they bump you into a higher tax bracket or affect Medicare premiums. Here are a few strategies to consider. Roth conversions before RMD age to reduce future RMDs. Qualified charitable distributions known as QCDs if you're 70 and a half or older, allowing you to donate RMDs tax-free, and adjusting your withdrawal strategy to smooth out taxable income. A financial professional can help you determine the most efficient approach. In closing, understanding the rules of required minimum distributions can help you stay compliant, manage taxes, and use your retirement savings more effectively. Make sure to visit our website, www.cortburgretirement.com. Our site is filled with educational videos, ebooks, publications, and financial calculators designed to help you learn more about your finances. As you search our site, send us a note regarding any questions you may have about any particular investment concepts or products, and we will get back to you quickly with a thoughtful answer. This is Miguel Gonzalez, certified retirement counselor and managing partner with Cortburg Retirement Advisors, signing off for this week's educational podcast.
The opinions expressed and material provided are for general information and should not be considered a solicitation for the purchase or sale of any security. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Securities offered through LPL Financial. Member FINRA SIPC. Investment advice offered through Private Advisor Group, LLC, a registered investment advisor. Private Advisor Group, LLC, and Cortburg Retirement Advisors, Inc. are separate entities from LPL Financial. Investing involves risk, including possible loss of principal.